Good morning, everyone. We'll get started shortly. We still have people dialing in, probably about 2 minutes. Hello, everyone. I'm Samantha Johnston, Allegro's Vice President of Marketing. Thank you all for joining us today for our webinar, The Value of CTRM Technology. We'll be covering the results of Allegro's annual customer value study. Before I introduce our speaker, let me first cover a few housekeeping items. All of your phone lines have been muted during the webinar. We'll take questions at the end during a brief Q&A session. Please use either the questions or chat feature to submit your questions at any time. For questions that we can't get to during the Q&A session, be sure to follow up with an email reply. We will be sending out a link of the recording to the webinar for those who registered but were unable to attend. Look for that link in your inbox sometime tomorrow. Now let me introduce our speaker. Patrick Reames is the founder and managing director of Commodity Technology Advisory. Comtech is one of the leading analysts in commodity management. When we decided to better understand our customer satisfaction, we collaborated with Patrick and his team to define value-related metrics, survey our customers, and create a comprehensive report to better understand the value of Allegro's solutions and services. In addition to heading up this project for Allegro, Patrick is also an industry veteran who brings a wealth of knowledge on how companies leverage commodity managed systems for better return on investment. That said, Patrick, I'll now turn it over to you.
Thank you, Samantha. I very much appreciate the introduction, and I appreciate the opportunity to have collaborated with Allegro in conducting this study. I think it's a very valuable piece of information, not only for Allegro users, but really for the broader industry as a whole, as they start to look at and try to quantify the value related to their investments in commodity management and CTRM systems. I think, first of all, it's important to kind of baseline why it's important, particularly in this environment, to attempt to measure the return on investment that you might receive from that IT dollar that you spend in these types of systems. Everybody on this call knows that the current price conditions are very difficult, to say the least. Oil is off 65% off of its highs of a year and a half ago. Natural gas prices have traded below $2 at Henry Hub. And then even outside of the energies, if you look at the broader commodity spectrum, we are seeing an across-the-board price collapse. Just this week, the Bloomberg index of commodities has reached a new low, or the lowest level since June of 1999. So it's not just energies, it's really the entire environment of commodity trading is at this time really starting to suffer. So in that environment, companies are starting to look at costs and what can they do to reduce costs. So it's very important when you look at your technology investment to be able to measure and quantify the return that you're getting from that investment in order to justify additional spend in order to better manage your business. So with that said, let's jump into, excuse me here. My slide seems to have frozen there real quick. Okay, when you think about value, really value is a balance of costs and benefits. On the benefit side, you have reduced or avoided cash costs. You might actually save money versus a previous system by deploying a new system. You have avoided risks, operational risk, market risk, regulatory risk that really provide significant value to your business from that investment. And then the most important, I think, is improved business results. Are you able to better conduct your business using a ETRM, CTRM system than if you weren't using that system, whether it was spreadsheets or internally developed systems. On the other side of the balance beam, you've got the cash costs. These systems are not costless by any stretch. They do cost money to license, implement, maintain. They also have that same cost associated in time. The deployment times of these systems can be somewhat lengthy. The support and maintenance of those does require additional personnel to expend time to manage that system, and that cost has to be recognized. And then there's potentially negative intangibles. If your system isn't a great system from a user standpoint, that user satisfaction may suffer. I've actually seen in the past, not Allegro systems, but other systems, users have actually left because they got tired of trying to manage the business in the system they were in. And so there's costs of hiring, those kind of things that have to be considered. And then also the impact of system constraints. Can you manage your business in your system? Does it provide you the necessary functionality to manage the entirety of your business? If not, there's an incremental cost associated with trying to manage that system, that business outside of your system. Now, as we think about value, it's important to keep in mind that value is time sensitive. Software costs do accrue over time. You've got the cost to license, implement, and support, as we talked about, these systems, and these costs tend to run in cycles. You've got the initial investment, and then you have over every so often, 18 months, 2 years, 3 years, upgrades, and then in between those upgrades, you're expending money to support the system. You also need to include the impact of any cost escalators that might be built into your contracts, your support, your services agreements. So those costs will grow over time. So if you look at the bottom line on the right-hand side of the slide, you see those costs accruing over time through the life of the use of your system. By the same token, the benefits accrue over time. You've got measurable cost reductions or revenue improvements that you can quantify. And while those may be, again, somewhat lumpy, like the cost side of the equation, you can start to look at how those benefits accrue. You also need to include things like risk reductions in there. Now, I know that these can be potentially the most difficult components to value in terms of the benefit. But if you've had an episode in the past where, because of lack of information or lack of data in your systems, you've had an event that has cost you money, that's a risk that you can quantify and say, we've got a system in place now that will avoid that. Whether that's an operational risk, a market risk, a regulatory risk, whatever it was, you can actually value that and include that in the accumulated benefits. And then again, there's the intangibles, much like there is on the negative side. You've got improved counterparty relationships, being able to accurately invoice or accurately reimburse based on your pay statements at your systems. If you can keep an accurate accounting, your relationships with your counterparties is going to improve. You've got the improved ability to forecast your financial performance, being able to run accurate P&Ls and being able to tell stakeholders and shareholders where you expect to be, and being able to meet those targets is a very significant benefit from a share price perspective. So again, looking at the right-hand side, that bottom line is the accrued benefits over time. Now you can take these two lines and overlay them, and you can come up with your break-even point. To the left of that break-even point, you've got the red line, your costs, and your green line, your benefits, and that's really a negative value up until that break-even point. On the right-hand side, that same area between the green line and the red line is a net positive value that starts to grow over time. So again, value is a time measurement, is a time-sensitive measurement, and that's something to keep in mind as we go through the value study. So let's move on to that value study and start to talk about the results that we saw. I won't read this slide to you, but ultimately this talks about the value of a CM, CTRM system to your business, particularly in the current environment. Having a programmatic approach to managing your business, not only as a system of record, but to provide the necessary feedback in this very difficult environment is key to success. So CTRM, CM systems, more than ever, are a very valuable asset to your business. Let's talk a little bit about the research that we did with Allegro and the demographics of the research group that we reached out to. In total, we interviewed 21 Allegro customers over several weeks in the third quarter of this year, September, August. The companies and individuals that participated in this research were provided to us by Allegro, who reached out to those customers to get their cooperation in working through this research effort with us. Of the 21 respondents, 17 of those respondents were using Allegro 8 or higher, and 4 of them were using Allegro 7. Of the respondents, company types that we talked to, you can see that on the top of the slide there. Utilities, merchant power gens, producers, traders, merchants were all well represented. In terms of the other category, we had coal companies, we had industrial consumers, airlines, those types of things, those types of entities within that respondent group. So a very good cross-section of the industry was represented. In terms of the systems that were replaced by Allegro, and this is important because this is the baseline that we did our research off of. As we go through the results, when we talk about the benefits or the experiences of the users, it's Allegro versus the previous system. So in terms of those previous systems, the legacy systems that were replaced by Allegro, you can see the makeup there. In a couple of cases, the companies we were talking to were startup businesses when they deployed Allegro. Of the remaining companies, about half were using other vendor-supplied systems, and then the other half were using spreadsheets or home-built systems.
I was going to send you with some suggested deals. I just hadn't finished it. That's why I didn't send it.
Sorry about that, guys. Apparently there's a line unmuted. In terms of the commodities traded, the majority of the companies that we talked to were trading natural gas and or oil and oil products and power. But then you can also see some of the other commodities that were traded there, either as a single commodity or as one of many commodities that they were trading. But you can see, again, a good cross-section of commodity types that were traded. So let's jump in the results. So when we think about why people buy systems, and we've broken the report down this way, we look at the various factors that motivate people to go out and make investments in ETRM, CTRM, CM technologies. One of those primary drivers is improving the access to information in order to make better business decisions. This is, we see year after year, a real, very significant driver, and probably the primary driver, as I mentioned, behind making these types of investments. It's important to get the users of these systems, and particularly those that really impact the bottom line, the traders, the schedulers, get them the information they need in order to make better business decisions. Now, a little more about the methodology here before I read this, go through the slide with you. In this section, we read statements to the respondents and asked them to give us their impression of that statement. We asked them on a scale of 1 to 5 how they felt about that statement, with 1 being they absolutely disagreed with the statement, and 5 being they absolutely agreed with it. 3 would be a response of they're not sure, or they're somewhat indifferent. They don't really have a strong opinion about it. Bottom line, though, a 5 would be a very strong positive response, and a 1 would be a very strong negative response. So the first statement we read was, we have improved visibility into our daily positions and or exposures by using Allegro. In this responded, with this statement, 18 of the 21 respondents agreed or absolutely agreed with that statement, a very strong positive response, yielding a composite score of 4.3. Of the remaining, 3 said they weren't really sure if they'd achieve that or not at this point. In fact, these were, as we mentioned, the early users of the system, so they have not necessarily accrued all of the benefits of that system. These were people that were on the system for less than 6 months in production. The next statement, we have improved access to information for our traders. 19 of the 21 did have traders utilizing the system, so we excluded the 2 that were not applicable. So 16 of 19 of those respondents said they absolutely agreed or agreed with that statement, yielding a composite score of 4.2. Again, a very strong positive reaction and a very strong positive validation of the fact that using these systems, and Allegro in particular in this case, has improved the access to information for their traders to make better business decisions. The next statement we read, we have improved the visibility and access to logistical information and optionality for schedulers and or transportation transmission personnel. Again, depends on the type of commodity you're trading, whether it's natural gas, power, bulk commodities, whatever, as to how you're, as to the types of people using the system. Bottom line, though, for those who are moving the commodity, scheduling the commodity, 11 of the 17 either agreed or absolutely agreed with that statement, yielding a pretty strong response of 3.7. As most people that move commodities, schedule commodities know, it's a difficult process and everybody has a preferred way of doing it. But I think this, for Allegro, this is a very positive statement. In the next area, we looked at reducing costs and increasing efficiency. As we note here, realizing a positive value for a CTRM system is in large part dependent upon improving your operational efficiencies while at the same time containing costs, finding net benefit from those efficiencies. Statement we read was, we have reduced the human effort associated with managing our business, meaning we have not had to put more bodies into the process while using the system. Of the respondent group, 14 of the 21 either agreed or strongly agreed with it, yielding a pretty strong response of 4.0 on a composite basis. The next statement was, we have reduced the time and effort in calculating valuations, a very important process in this marketplace. Of the respondent group, 18 of the 21 said they agreed or absolutely agreed with it, giving a very strong response, composite score of 4.4. You can see in this case that there was nobody that disagreed with that statement, that they all felt that they got positive benefit and have reduced the time and effort in calculating those valuations. The next statement we read was, we have reduced the time and effort required for our month-end close process. Again, a very positive response of the 19 to which this was applicable. 16 of those 19 either agreed or strongly agreed with the statement, yielding 4.3 as the composite score. Another area that people look at when they think about why they buy systems is error reduction. Spreadsheets are very error-prone. Many home-built systems don't have the validations necessary to reduce errors. So a structured ETRM, CTRM, CM solution will provide that data validation and ensure that you are accurately calculating valuations based upon accurate prices and volumes. Within this area, our statement that we read was, we have reduced the number and or scale of errors associated with data entry. In this case, 17 of the 21 respondents said they agreed or absolutely agreed. The next one that we read was, we have reduced the errors associated with settlement invoicing. Of this, 21 that were using the system for invoicing, 18 of those 20 said that they agreed or absolutely agreed with it, yielding again a very positive score of 4.3 on a composite basis. So again, the value accrued from using a CTRM system is significant when you look at error reduction. Errors can be a very expensive problem in this marketplace, and these types of programmatic approaches to invoicing and managing your business can help to reduce those errors. The next area that people buy systems for is to be able to respond to changes in business and markets. This is a rapidly changing environment that we operate in, both from a business perspective and a regulatory perspective. And your CTRM, CM system and the vendor that supports it have got to stay ahead of the market requirements, giving you the tools and the flexibility you need in order to manage your business effectively as those conditions change. So in this area, we read the statement. We have achieved the ability to more readily react to industry changes by utilizing Allegro. Of the 20 respondents that were valid in this statement, 13 of the 20 said that they did agree or absolutely agree with that, yielding a composite score of 4.0. The next statement that we read, have you been able to develop an effective regulatory compliance program utilizing Allegro? Very important in the current regulatory environment where regulations are becoming more intrusive, more invasive, and the risks associated with not being compliant can be very, very expensive indeed. So of the 17 that felt they were exposed to regulatory compliance issues, 13 of those 17 either agreed or absolutely agreed to that statement, yielding a composite score of 3.9. The next area that we talked about was looking more deeply at containing costs. I think it's important too at this point to point out that vendor-supplied systems are going to invariably cost more, both to acquire, implement, and support and maintain when compared with cash costs associated with spreadsheets or simple internally developed systems. There's no doubt about it that you're going to spend more money now, and the magnitude of that can vary by shop, but you're going to spend more money on a vendor-supplied system than you are on spreadsheets. It's a given. I think it's important, though, to think about over time, again, the value that's accrued from that system, and we've talked about those benefits of a sophisticated CTRM CM system. So it's not fair simply to look at a cost basis. You've got to look at it more holistically than that. But in this area, we did read these statements to our respondent group. This first statement, our system upgrade maintenance effort and time have been reduced. Of the 16 respondents that felt it was a valid statement for them, 9 of those 16 agreed with that. And keep in mind too that this is baselined against the previous systems. So if you reflect back to that demographic slide where 2 had no systems in place, and the remainder were split between spreadsheets or home-built systems or other vendor-supplied systems, this is a very strong net positive for Allegro when viewed in that way. The next statement was, we have reduced our overall system costs since migrating to Allegro versus that previous system. Of the 20 valid respondents, 8 of those 20 provided a score of 4 or 5, yielding a composite score of 3.0. And again, remember back to the demographics of where this is compared against. The other areas that we really wanted to look at was how were the companies able to respond to changes in their business and the markets utilizing Allegro's CTRM CM solution. This is a very important component. Again, when people think about why to buy systems, you need to have a system that can provide you the flexibility to grow and change with your business. So moving away from the previous methodology, we just asked them to respond to simply yes and no questions here. The first question we asked was, has the number of daily transactions increased since implementing Allegro? In this case, you can see that 62% of our respondents said yes, they have been pushing more transactions through the systems since they first implemented, so the system has grown with the business. Then we ask, has the notional value of your transactions increased since implementing Allegro? This question tells you a little bit about the growth of the business, but I don't think it gives you the information you really need to understand the value of the system, simply because this is a price-sensitive question. as commodity prices have declined, the notional values have also declined. So while 55% of the respondents said yes, their notional value has increased, you've also got to take into account the volumes of commodities being traded. The next question was, have you expanded your footprint of Allegro by adding additional components since you first implemented? This again shows the expandability of the Allegro solution. In this case, 62% of the respondents said yes, they had added additional components. The next question we looked at was, has your business grown into new commodities and or markets since you first implemented Allegro? 76, or about 3/4 of the respondents, said, yeah, we have grown into new commodities and business. And of that 76, 94% of the respondents that said yes are using Allegro to track and manage that new business. So again, I think it speaks well to Allegro's ability to expand and grow with their client base and have those clients achieve value from that investment without spending significant dollars and bringing in additional systems to address those new business units. So at the end of the day, when you think about your CTRM-CM solution, it really is the center of your technology invoice or universe in a commodity management business or a commodity trading business or a commodity production business. So this core system has got to be able to integrate easily with everything else in your organization, your ERP systems, your accounting systems, your data feeds, any other types of interfaces that, any other systems that you may need to interface with that. So we ask the question here, do you feel that Allegro enables you to deploy and or integrate new complementary technologies for better commodity management or to better manage your business? In this case, a full 96% said yes, they absolutely felt that that was the case. There was a couple in there that weren't sure because they were using the system very much in a standalone business and hadn't attempted to perform that type of integration with Allegro or expand the capabilities of Allegro through bringing in additional systems. So again, a very strong positive result for Allegro in that case. Bottom line, let's talk about perceived value. We asked the respondents, again, about how they felt about the return that Allegro was giving them. We said, overall, how would you estimate the value you've received from your use of Allegro versus the cost of the Allegro license, implementation, and support, the initial investment and ongoing support and maintenance of Allegro? A full 90% believed that the value they received from their investment was positive or very positive. In this case, we asked them to rank it as very negative, negative, break even, positive, or very positive. And again, 90% indicated that at this point in time, and again, value is time sensitive, they believe that they have received a positive or very positive return on that investment. Finally, we asked our respondent group if they would recommend Allegro to others in the industry that were looking for similar capabilities. In this case, of 100%, all 21 of the respondents said that they would or have previously recommended Allegro to their industry peers. So again, a very positive response for Allegro in this case. This is the third year that we have undertaken this effort with Allegro, this value study research. And we've included this chart here, and I'm not going to read it to you, but you can see how Allegro has performed over time with their client base. Every year that we've done the study, we have seen increasingly positive results for Allegro. So I think that's an important thing to note, that as Allegro's grown their client base and the value that that client base believes they receive from their investment has continued to improve over that time. So this will be in the materials that are available after the presentation, so you can look through that at your own time. Before we wrap up, I want to talk about looking at your investment and trying to maximize the return on that investment, basically finding additional value from that investment in what is, again, a very difficult market. Now, it's got to be noted that, of course, all businesses are unique, and there's no single strategy for improving the value proposition from that technology investment. But if you look across the board, there are common areas of potential improvement in every business. These systems do contain a wealth of data, and I think that that may be underappreciated. So the real key to finding additional value is being able to leverage that data contained within these systems in order to improve your performance of your business, being able to optimize assets, being able to really show demonstrable gains from the use of these systems. So some thoughts about how you might achieve that. You can look at optimizing the performance, the margins on your assets, agreements, and trades. Identify those opportunities to improve contract terms and conditions, for instance. Some legacy contracts have just been hanging out there. They're just evergreen. There may be an opportunity by mining the data from the contract section of the system and looking at the performance of those contracts over time to actually go back and renegotiate those agreements when they come up for renegotiation. You can also look at opportunities to improve logistical performance. Again, the scheduling aspects of your business. Can you use the data in the system to measure not only the performance, but to start to make adjustments to your transportation agreements, for instance, in order to help you reduce costs and better perform? Look at improving fuels management. Can you get cheaper fuels in? Can you look at the performance of that asset and the fuels cost associated with that and try to find better options over time? And then improve the monitoring and scoring of trading performance. Are your traders, can you get P&L at a trader level in order to consistently measure that trader's performance and provide them the information they need in order to find additional opportunities in the marketplace? The other area you can look at is reducing risks, using the systems to help you more effectively hedge positions. Now, I know hedging is a bit of a controversial subject in this marketplace, given falling prices and given the uncertainty in the marketplace, but there are opportunities using the system to look at hedge performance and make sure that you are optimizing your hedging strategy. Close your holes in any of the regulatory compliance exposures that you might have. Make sure that the systems are providing you the information and the reports necessary to maintain regulatory compliance and avoid any actions by the regulators that may come your way. The problem with regulation is you're always guilty until proven innocent, and your systems have got to be able to prove that innocence anytime questions arise. You also want to look at being able to improve your credit monitoring and management. This is as prices fall and more companies are stressed, credit monitoring and management is becoming more and more important, and you need to look at how you can use your system to upgrade your credit monitoring and management performance. And then finally, look at how to improve your operations. Fully leverage your system capabilities to improve your workflow and possibly reduce the time required to manage the system. I'm not saying you want to try to reduce head count, but you want to be able to deploy your resources to areas that are most effective for your business. If you can utilize workflow capabilities within your system to improve the use of that system, you may be able to spend more time elsewhere rather than simply managing the system. And then finally, I think you want to try to look at adapting to system standards wherever possible. There's the old rule in this marketplace that vendor-supplied systems are good for 80% of your business, and then 20% is workaround or custom development. I don't know that that's necessarily the case, but if we consider it from that point of view, look for opportunities to reduce that 20%. Anything that you do outside of your primary system does have a cost associated with it. Make sure that that cost and those exposures that come from managing outside your system are worth it, given the returns that you may be getting from that particular element of business that's managed outside of the system. So finally, let's talk a little bit about measuring your own ROI. I won't go through this in great detail, but the report that you can get after this call will provide you, I think, some tools, some ideas on helping you to determine ROI. ROI, at the end of the day, is a simple equation. It's the benefits minus the cost divided by the costs, providing you kind of that measurement that you can kind of hang your hat on in terms of your initial investment in your CTR-MCM solution. Some of the areas that we talk about in terms of benefits and costs are listed here. Again, I won't go through them. These are things that will just give you an idea of the types of areas and the types of elements that you should be looking at as you look to quantify your investment in your ETRM, CTRM system. And again, these will be available with the download after the presentation. And with that, I think I'll turn it back over to Samantha and see if she's had any questions from the audience.
Thanks, Patrick. As mentioned in the beginning of the webinar, feel free to submit your questions through the questions feature or the chat feature that is on your webinar panel. As we wait for some questions to start coming in, as a reminder, we will send out a link to the recording of the webinar for your colleagues who are unable to join. We'll attach or link to Patrick's presentation and the detailed report as well, as he mentioned. I do have a few questions that have come in, and Patrick, I'll start with this one. What is the ramp-up time in terms of seeing ROI with these types of systems?
Well, I would assume positive ROI, and really that varies by customer circumstance. It could be that you could start to see a real benefit from this very quickly. If your system has been deployed quickly and the users have really gotten into the system and really started to use it effectively, you could see a positive ROI within a couple of years, and I think, or even less, 18 months to 2 years. I think probably from an industry standard standpoint, it's probably a little longer than that, given the effort and time required to implement these systems. But I think, that 2 to 3 year is probably a decent average.
Okay. The next question that's come in, and this is kind of not, it's a little bit, it kind of deviates from the survey a bit, but it says, considering current market conditions, how have you seen that impact the sector, the CTRM space? Are boards still approving the spend for these types of systems?
Yeah, that's an interesting question. It's actually one that I looked at in our blog yesterday in the CTRM Center. We are seeing money still being spent on CTRM systems. There's no doubt about it. But we are also seeing that money is taking longer to be let go, let's put it. Boards are reviewing costs right now and looking at spending. They're looking you've got to be able to justify spend in this market condition. And again, I think that's one reason why this value study is very important right now, is there are demonstrable benefits that can be accrued through deploying a sophisticated CTR-MCM solution. And I think given where prices for commodities are right now, being able to make the right investments in order to improve business performance is very important. So while, again, it is taking longer to get approval to spend money in this marketplace, I think these types of studies will help to kind of accelerate that spend, and we will continue to see the market reasonably healthy given current conditions. It will take longer for deals to close, but deals will close, and vendors will continue to make money in this marketplace as they should.
Thanks, Patrick. Another one has come in specific to the value study. Are there plans to further quantify the Allegro user experience? Will you continue this next year, and what will that look like?
From the Comtech standpoint, yeah, we're certainly more than happy to continue next year. I believe that is the plan with Allegro, but I won't speak for them. In terms of being able to quantify the numbers, there's a couple of issues associated with that. One is just the practical aspect of asking companies for performance numbers. Most companies are not necessarily willing to give you granular numbers that you can work with. So it's difficult for us as a third party to come up with financial metrics working with the respondent group. We just simply, as you know, a harsh reality, simply can't get to those numbers. We're not going to be privy to those. So unfortunately, we won't be able, I think, ever to be able to provide a true quantification at this level. I think that's something that has to be done internally with each of the customers of Allegro or any vendor of CTRM, CM technologies, any vendor client of CRM, CTRM technologies. Those are metrics that need to be developed internally, and they will be kept internally and not shared with us.
That's fair. This is the last question, and then I'll wrap us up. So are there specialized skill sets required to implement these systems? How specialized is that skill set? Do you typically see this being done by an outside consulting group?
There is highly specialized knowledge and skills required to do this. It's a combination of technology resources, business resources, of course, and I think you know, that anybody that's been involved with this space understands the complexity of doing it. We are seeing and have seen over the last 5 years a growing use of third-party consultants to not only assist in the implementation of these solutions, but also during the buying process. So the use of third-party consultants or outside consultants to supplement customer resources, that is definitely a growing trend that we've seen over time.
Thanks, Patrick. Thanks for your time today as well. And I think that's going to wrap us up. If you guys are interested in learning more about Allegro, please visit our website, allegrodev.com. Thanks for your time today. Look for the link in your inbox tomorrow.